Hello trade pros, as you can tell, I am back in the office and today we've got a new video for you. So I'm super excited to be back here and super excited to be making these videos. Now, in today's video, I'm going to show you how you can turn your $500 account into a $500,000 account. Actually, no, I'm not, because I really don't think that it's possible if you're trying to stay consistent. So I'm actually going to show you how you can grow your small account into something sustainable, something larger and consistent in this video today. So we're not going to be talking about how to turn $500 into Lambos, $500 into mansions, or we're not going to be talking about signal services and stuff like that that usually promise things like huge account blowups. But what we're going to be talking about today is a few tips that will help you identify some key ways to turn that smaller account into something consistent and something that will grow. So why did I bring up trading signals and trading rooms that provide signals? Well, because it's not consistent. Would you rather learn how to fish or be given a fish every day? The problem with that is learning how to fish, you have the skill forever. Given a fish every day, you're dependent on someone else. So let's identify some key consistent ways that you can grow your small account and find that perpetual income. So before we get into this, I'd like you all to smash that like button, hit that subscribe button to let you know when we do go live every single morning. So before we get started with this video, I want you guys to relax, enjoy, and identify with me maybe some of your ideas where you could improve and grow that small account. So these few tips are meant for you, for traders of all caliber, beginners, intermediate, or pros, to grow their accounts. Even if it's a small account or not so much of a small account, you can take these tips. You'll find at least one of these tips useful to help your account grow. So why would you want to listen to me in terms of helping you grow a small account? Well, for one, I was there. I did grow a small account. I'm currently doing it in May. Now, if you want to learn more about that, just come and check us out at TRADEPRO Academy. But why should you listen to me in terms of growing a small account? Well, I've done it. I've been there. I've grown the small account. I've made all the mistakes. That's what counts the most. I made the mistakes and learned from them, and I beat my head off the wall until that small account did grow. So what I'm going to show you today is areas where I think I could have found useful when I started to grow that small account, so you can skip a lot of the heartache. A lot of the mistakes included buying tops, selling bottoms, moving stops, whatever it is, you name it. We are here to identify how you can just mitigate those mistakes and identify those key tips to grow that small account. So tip number one, analyzing your trades and finding your strengths and weaknesses. In terms of analyzing your trades, you want to go back a year, back a few months, whenever it was, and identify what kind of trades have you been taking, right? What are the weaknesses and the strengths in your trading that you could develop better? So for example, one of my weaknesses personally is not letting winners run and trailing. I have a big issue with trailing profits. So the way I see it is I have a multiple lot position, and I'm very good at identifying the first 30% of that position. Where should that be taken off? No problem. Then the second 30%, that's where it gets a little iffy for the rest of that position. So my issue is when I see a slight pullback, even though I've taken a good chunk of profit off, when I see a slight pullback, I get hesitant and just flatten the position, still trying to, and instead of trying to let that wave run and push further for more gains. Now, this is a larger weakness that I've been working on to improve. So I've passed that point of consistency where I need to just scale up, and now I just need to try and let those winners run. Now, some of your weaknesses, or whoever is watching, may include, hey, I move my stops, or hey, I take too many revenge trades, or hey, maybe I don't switch buys fast enough. Whatever it is, identify that weakness and accept it, and work towards making it better, making it into one of your strengths. Now, the risk in my weakness shapes up well because I do take smaller losses, so my time in trades is very small, but I'll also take moderate wins. So instead of taking a full win in my expected profit where I anticipated it to go, I'll cut it a little shorter. So that doesn't mess up with my ratio. I guarantee that it's a 2-to-1 every time I do take that flattened profit, but it could be much greater. So what is a personal strength that I may have? So when I'm talking about my weaknesses, I need to talk about my strengths, because if we're fixing weaknesses, we're also fixing strengths to make the strengths more prominent to grow that small account. One of my strengths is actually cutting losers fast. So I'm very good at scratching trades, and I think that's amazing because it helps my risk reward a lot. So what I could do is try and implement both of them and focus on that strength where I take such minimal losses that these 1-to-2 ratios, risk to reward, becomes even higher if I take a smaller loss. So I don't necessarily have to take massive winners, but as I work towards taking those massive winners, I can already take my strength and apply it taking smaller stops. Now your strength might be switching biases, letting the winners run, cutting losers shorter, whatever it is. Try and amplify that strength. You also want to be analyzing your trades. So the trades that you took a month ago, a year ago, whatever it may be, analyze those trades and find a Hall of Fame trade sequence, trades that you know are amazing A-plus trades, and try and replicate them as much as possible, because that feeds into your strength. And what you're doing with the rest of the trades, the losers, just brush them aside or try and move them aside and focus on the ones that you're really good at. Noticing your strengths and weaknesses allows you to take preventative measures in capital preservation. So you want to be preserving your capital on a small account because you have smaller money to work with. And by that, you're preserving the capital, but you're also extending the profit. So if you manage your risk in this small account, you will be rewarded and you'll see the consistency build up. Now, tip number 2 that we have today is developing a very structured trading routine and trading habits. This is pivotal because without discipline and diligence, trading is nothing, and it becomes very, very difficult. You learn bad habits at the beginning of a trading career for the most part. I know a lot of new traders do. Now, if you can minimize that and actually learn great habits from the start, you will notice that small account will grow drastically in comparison to one that learns slightly less favorable habits. Bad habits might include adding to losers, moving stops. The list is really endless, but one of the main pivotal bad habits that traders have is not being disciplined and diligent and not following the trading plan that they've worked so hard to construct or have gotten from someone else. So if you have a plan, just take this as an example. If you have the best strategy ever, a strategy that guarantees 90% success. Even in our fantasies, we don't guarantee 100% success when it comes to trading, but you need to just follow this plan. That is all it takes. You take the plan, you do exactly what it says, and you're guaranteed at least a 90% chance of being a successful trader. Now, this plan would be worthless to someone who can't follow a plan. So that's why following a plan is just astoundingly important in someone's trading career and building a small account, right? So this is how you build good habits, by being able to first follow your plan, right? Your plan has laid out all your risk management and how you're going to trade. So you want to be building a trading routine around that. Me personally, my trading routine starts the second I wake up. I'm very process driven, and I think your trading should be process driven so you can X out the emotion out of it. So my process in the morning involves something like waking up, breakfast, coffee, whatever it is, reading a lot of the news and doing my pre-market analysis. I do my pre-market levels with everyone in the room every single morning. I'll just jot down some trade ideas. Where am I getting long? Where am I getting short? Identify all those levels and have my next best trades even half an hour to an hour before the market even opens. I know what I'm doing. Always have a next best trade, and that is my process to finding those high probability and high quality trades. So this is a habit that I've built up, and I encourage a lot of you to start building good habits when it comes to trading. Now, one of the best habits is follow that plan. I know everyone's human and you can't follow the plan 100% of the time, but try your best to follow it as most precise as you can. Not following a plan leads to interesting complex where you think that the plan doesn't work when you've actually failed to follow it. So you failed the plan rather than the plan has failed you. But a lot of traders start looking for different things and different plans. So they fail multiple plans. Those plans don't fail them. And that is a bad habit to build. Maybe one of the worst habits, along with not following the plan. So if the plan has been written, it's been back tested, you've seen the success, one bad day doesn't mean that you should shelf this plan and look for something else. If you're constantly looking for the next best thing, you don't give yourself time to focus and master the one thing that's important. Which bleeds out accounts if you have just a constant array of different trading plans that you're trying, rather than find the consistency and trying to grow with that one solidified plan. In terms of risk management in the plan, this is another pivotal aspect to growing that small account. You need to have sound risk management that you follow. A 1-to-2 ratio risk to reward is a great start, and you can build it from there. But also your daily risk to reward. You don't want to be losing $200 a day one day and then gaining only $100 the next day. What that does is the complete opposite of building your small account. It actually bleeds it out slowly but surely, right? If you just flip those two numbers, 200 and 100, you're making $200 a day, you're losing $100 a day, and you're finding the consistency and having more green days than red days, and slowly, yes, your account will grow. Even though it's a 2-to-1 ratio, it will grow pretty well. And from there, you start increasing size. You start scaling up. Have a plan to scale up, because that is how you're gonna grow this small account, right? If you start with $500 and you just trade 1s and 2 lots your whole life with just taking the same risk to reward, what you're ensuring there is you're gonna be ensuring that you make the same amount each time instead of growing it, right? The account might grow, but at a certain point, you're gonna have to start taking money out of it to start living, and that account does not grow with your exponential expenses, right? So you want to have a scaling plan that involves a level of consistency before you move up, and you want to make sure that you have that level of consistency for a set time period before you're comfortable moving up. Now, the final tip before a slight little bonus tip, so I guess the second last tip here that I have for you is focusing on one thing. So focusing on one strategy. I know you guys have been waiting for me to start dishing out strategies throughout this, how to scale your small account. But the reality of it is there's a lot of mental preparedness that you need before you actually start looking at strategies. Now, there's one thing I want you guys to know. Focus on one only strategy and master that one strategy. That's how you will grow that small account. Because the worst thing you could do is one day you do fades, the next day you're looking for breakouts, the third day you're doing pullbacks, and you start mixing them all together. And what that does is spread you too thin, and it doesn't give you a chance to actually learn one strategy really well, right? Maybe you're gap trading, maybe you're doing this one day, maybe you're doing that next week, and all of a sudden it becomes jumbled and there's no process, there's no sequence to it. So the easiest and most popular trading strategy, I think, is a momentum-driven strategy called the pullback strategy, where you either buy a dip into the pullback for the continued move up, or you sell a rip into the pullback for the continued move down. Now, I really want you guys to just focus on that one strategy before adding multiple to the repertoire. If you're a master at just one strategy, and maybe a momentum strategy, because momentum is a cornerstone of market trading, markets tend to move in trends, so the pullback is a viable strategy for you to learn. If you focus on that, then you will see that small account grow. There may only be 2 to 3 trade opportunities a day if you just focus on one trading strategy, but what that does is if you learn how to do one strategy, master one strategy, you can trade multiple different markets, multiple different stocks, so you enable yourself to have multiple opportunities and not just a few opportunities. Maybe even you're only a long trader, or maybe you're only a short trader, right? Maybe you're only good on the short side, maybe you're only good at the long side. Some people may think that may limit you, and some days you might not have trades if the move is going completely against you. If you can learn how to read the market and market structure, no matter the day, you will find opportunity to both either the long or the short side. So with this being said, my final tip, my bonus tip for you all is trade a market that allows you to trade with a small amount. So starting with $500, $1,000. Trade a market that allows you to do this. Because if you're in the US and you trade stocks, the pattern day trader rule stops you. You need $25,000 or more to trade that. And starting with a small account, if you're considering $25,000 a small account, then you're good to go. But if you want a small account, $500, $1,000, start with a market that allows this, discounted brokers, whatever it may be. The futures market is great for that because it allows you to trade the micro futures, which are only a fraction, 1/10 of the minis. That means you only need $40 at a good broker in margin to trade only one contract of a micro E-mini futures contract, so an equity E-mini. On the micro end. Now, you could trade Forex as well. They allow you to have different lot sizes, but if you want a centralized, very liquid market, the micro equity futures market allows you to do that with a small account and allows you to find the ability to scale up and go from there. You can build a lot of knowledge, process, everything in this small account, and even build up a good income from it, surprisingly. So you can learn so much from this micro equity futures market, and just find a market that allows you to trade with a small amount, because this is going to be your learning capital at the beginning. Having said that, guys, I just gave you a few tips to grow that small account. Whether you're beginner, intermediate, or advanced, take these tools. There's probably one of them there that you think is going to be of value, and go and try it out. Drop a comment down below what you think that we need for us to grow a small account. What do you need to grow a small account? How do you think that you can grow a small account? Is it one of these tips or is it something else? So drop a comment down below. Tell me if you've tried some of these and you've grown that small account, and hit that like button, hit that subscribe button, and we'll see you guys next time on YouTube.